Hello, everyone. Welcome to Momentum Lab. And we have Prashanth Krishna, who's an esteemed guest for today's podcast. Prashant ji actually needs no introduction. He has been a renowned face in the field of momentum investing in India. And some of the great works of Prashant sir is Portfolio Yoga, where he runs a phenomenal blog, which has a lot of insights and nuggets of wisdom related to momentum investing. And he also runs a Slack channel dedicated to momentum investors, where the conversations are very enriching and helps a lot of DAV momentum investors. And Prashant ji has also been currently associated with Walrest PMS as a consultant, and earlier he was the fund manager for Momentum Portfolio run by Capital Mind. And all through his career in the last 2 decades, Prashant was responsible or was leading roles related to the markets. And he has varied experience, especially in momentum investing. In this podcast, we want to understand more from him with respect to the psychological nuances a momentum investor should possess than the technical aspects of momentum investing. As a momentum investor, if you spend a couple of months or maybe a year or so, you'll get the depths or a deeper understanding of momentum investing. But more than that, as a DIY momentum investors, we need to pick his brains from the rich and varied experience that he had over the last 5-10 years building his momentum portfolio and in public. So you can follow his Twitter thread where he has started to document his momentum investment journey since 2018. Am I right?
2017 May.
So that's a great learning. If you just follow his thread, that single thread, I think you would understand the mental resilience that he has, and you can get more insights than any of the books. So over to you, sir. Thanks a lot for taking your time and joining the session.
Thank you. Thank you for the warm welcome kind of thing.
Thanks a lot, sir. So the first question that I had was usually when I interact with a lot of momentum investors, the journey when I ask them like, have you started momentum investing as your first choice of investing? Most of them reply with the answer no. It was something else. And later at some point of time, they have moved to momentum investing. Was it the same with you also, sir? Was there any
Yeah.
pivotal moment?
Look, I mean, only now momentum investing is getting some kind of, what do you say, uh, limelight in a way, if you want to put it that way. I mean, you are getting more information, more understanding, more. I mean, mutual funds are now starting to come out in momentum funds kind of thing, which was not the case even pre-corona. Forget about long back. So it was not really momentum investing is to come out. I mean, I won't call it a quant style of investing, but it's close to a quant style of investing. So what it means is that when you're coming in itself, the only way you will come on directly to a quant style is if you have studied somewhere in the quant style of what the finance kind of thing, which is not available in India. So most of us, including me, we come up with investors mostly looking at value or growth. I mean, look, that's the world
Right.
we are part of. I mean, when you look at a newspapers, they talk about the valuations, where they talk about the growth of companies kind of thing. So that's what we are exposed to. So what we are exposed, we think that's the way to. I mean, you have to start somewhere. So that's the way we most of us enter kind of thing. For me, it has always been. It started as a value kind of thing, but I shifted to rule based when I figured out that. I mean, the problem with value for me was I could not judge. I mean, it's I mean, you have to. There are a lot of judgment calls, kind of thing, discretionary calls you have to take, and that's for me is very tough. So for me, it was like a rule based is where you. I mean, you think about the rules based upon a certain philosophy. It may be value itself. I mean, you can have value run on a rule based system itself, or you can have quality run on. I mean, you can have any strategy run on a set of rules where you know, okay, it's a binary, it's a yes or no. There's no maybe, if maybe kind of thing. Because I mean, if you are wanting having to judge a management, how do you judge? I mean, you can actually take all the parameters, but you really don't know the management to really think what they will do 1 year from now or 3 years from now, kind of thing. So for me, what will I put it as? The rule based is more of a, it makes decision simple for me. I mean, it's like taking a call without thinking twice in a way. I mean, you have a yes or no answer. Once you have a yes or no answer, it makes it simple.
Right. Right. So was this the year then to 2017 where you had started momentum investing, or was it even
No,
before?
momentum investing as a portfolio based setup, I started in 17. I used to run, I mean, I used to do trading based upon what is called as a trend following kind of thing, which is, I mean, if you were to take momentum investing, it's what we call as relative momentum, wherein we are looking at one stock relative to others and saying, okay, this is the relative to others, this has stock has done X, so I'm ranking it. But what I used to do earlier was time series momentum, which is I'm looking at only Nifty and saying, okay, is it an uptrend or a downtrend? Trying to figure out the trend of the Nifty and then taking a call on being a long or a short. Again, binary, again rule based, but it was a single ticker based system kind of thing. I mean, world over, momentum is much more lower compared to CD. I mean, trend following. Trend following is a bigger. I mean, when you look at money or funds managed by trend forwards, that's much bigger sum of money, even worldwide, not just in India kind of thing. I mean, India, we don't have any CTS because
It is, yeah.
that's a very new concept in any way. But if you talk about Jerry Parker or, I mean, the original, what they call the turtles kind of thing. I mean, they came up very long back and they have been doing it systematically from 30, 40 years kind of thing, which is phenomenally, look, end of the day, to survive 40 years in a market, being exposed to the market, put it that way, exposed to the market all the time. It's not like you're out of the market 3 years and then again back into position. You are always in position, either long or short. And then surviving for 30, 40 years means that a strategy has to have some value. It can't be, I mean, it can be a fluke. I mean, you can run a fluke for a few years at max kind of thing if the market is very convenient to you. But at some point of time, market will diverge.
Right. And how do you handle this cognitive dissonance? Like momentum investing often feels counterintuitive to many. Like we are buying high and selling higher, and we are selling the stocks which had run up so well or which were have done phenomenally well, but recently have, let's say, started to falter. And how do you manage this internal conflict?
I mean, if you think about it, look, end of the day, you have to, I mean, once you build a system, the question is how well you believe in the system. Because if you don't believe in the system, there's no point in following the system. And all the cognitive dissonance comes if you start doubting your system. I mean, the system, it's, I mean, look, when you test the system for a backtest and when you do a backtest, for example, we are looking at what? We are looking at how the system has performed in the X number of years in the past.
Right.
I mean, most no systems will be one way 45-degree. I mean, if that's the case, then it's I mean, most probably a system that's looking ahead in the future and will not deliver real results kind of thing. So you know that the system will have its good days, good years, bad years. I mean, once you observe and once you say, okay, this is the way I think. I mean, take a drawdown like a Corona, for example. When Corona happened, out of the blue, it was a really a black swan in every way kind of thing because no one, I don't think anyone would have anticipated the whole world to shut down, more or less. Economies to shut down, the world to shut down. So when things that happened, market fell off, and market fell off, even momentum, every strategy has to fall because we are a subset of the market. We are not exactly outside the market. So the only way you could compare was saying, okay, how did momentum or my strategy, I mean, it doesn't have to be momentum. My strategy perform in the similar times in the past. So you have to go back to 2008 and say, okay, my market fell off. How did my strategy evolve or how did my strategy go through it? That gives you confidence that was, I mean, you have to stay true it. I mean, end of the day, that confidence has to come from you because system will only give you a buy and sell. That's all it is going to
Right.
give you. The question is, I mean, the better the belief, the better it is in terms of saying, okay, even though right now it looks very bad because at that point of time does look bad. I mean, it was bad kind of thing. So the question is, for me and for many, it's you just have to wait through it. There's no way. I mean, there's no. I mean, momentum investing or even no style of investing. There's a magic bullet kind of thing where you say, I'll only have the good days, not the bad days. We'll have the bad days, good days regularly. I mean, cycle. The only differentiation is, okay, bad days if as long as it's the bad days is in line with my thought process or my strategy, that's okay. I mean, I mean, is it? I mean, I would be very happy if you can avoid it, but I don't think you can avoid. You have to. I mean, mentally, you have to be much more prepared, saying that you will have bad days, you will have bad months, you will have maybe double-digit negative months, kind of thing. But all is well, kind of thing in that sense. Three
And
idiots.
how, yes, sir, please continue.
Sorry. No, no. I mean, you have. I mean, look. There's no. I mean, it can't be something. I mean, I can tell anyone. So, boss, don't worry. It's okay. Going to be okay. But unless it comes from that other person inside, he believes it. It's tough, and it has to come from our own beliefs. It
Right.
doesn't. I mean, you can read books and say long term. I mean, everything is good. But those are all. I mean, when we read a book on 100 years of market, that 100 years passes in maybe 100 pages, kind of thing.
Correct.
Here, every day counts. Every day you are waking up and seeing your equity curve go down and down, or equity curve on a very negative part, kind of thing. And unless you really, I mean, again, that's our. For me, it's like because I came from the trend following style of market. So I mean, I used to do that from around 2008, 9 onwards, kind of thing.
Okay.
So I know, I mean, look, I'll have a CD. I mean, in trend following, for example, we talk about three streaks of losses, kind of thing. So I can have a streak of 8 losses, 9 losses, one after another. Every trade I take, it's a loss because market is in a what do you say, range bound fashion where all my longs are not getting triggered, but not going. Stock Nifty is not going up. Shorts are getting triggered. Nifty is not coming down. Overall, I'm getting whipped left, right, center, kind of thing. But I also have seen that after a certain number of whips, then I have a great one move, kind of thing. One great, I mean, even in Corona, for example, my own system was short on Nifty well before the market had started falling. I mean, Nifty had fallen below the 200, I think on 27th of February, of something of that sort. So market itself had started to show signatures of a trending down, kind of thing. The point, what I'm trying to make is that your belief has to come from you. I mean, you have to believe in your system and feel that the system you have designed is good enough. Yeah, it will have its bad days, but when the good days comes, I'll be able to emerge stronger in that sense.
Got it, sir. As a flip of it, let's say we have to have a belief in our own system, and in the times, let's say, of the exuberance, where we are doing extraordinarily well, momentum investing is having a periods of extraordinary success, then does it inflate your ego? And if it does, how do you try to detach from it?
Look, again, I mean, we can't be a computer. I mean, we are like emotional. I mean, we are egoistic, kind of thing. I mean, last 4 years, for example, has been fantastic for markets. It doesn't
Yes.
matter where you were, as
Right.
long as you participated,
Yeah.
you made very good money, kind of thing. At least for me, it has been very good environment for me to build a decent capital.
Right.
The problem is that is ego coming at some point. I think it will. I mean, I don't think it. No one will say no, no. I mean, very humble that I don't have any ego. It will come because you feel that whatever you are doing, it's everything is winning. What do I mean? It's like I mean that Sacred Games famous dialogue. Kabhi kabhi lagta hai Bhagwan ho kind of. It happens. I mean, there's no way you can avoid it. The point is that as long as you don't allow it to interfere with your activities in the sense of running your system, I think that's okay. I mean, mentally, boss, I mean, feel happy. I'm the king. Who cares? As long as I don't screw up my system saying that, no, this stock is falling, it's actually out of my momentum, but I think I know better. Then the issue starts. As long as you don't interfere with the system, enjoy the right kind of thing, I would say.
Nice. And while momentum works, some might be facing, I mean, giving criticism for us to be like heard like speculative and also sometimes calling as dumb money. How do you cultivate the resilience or the thick skin to stick with the strategy while you might not align with their narrative?
No, look, I have friends of mine who are pure value investors, kind of thing. They will never touch stocks that I do. I will may not. I mean, I may be interested, but I may not touch the stocks they do, kind of thing. But
Right.
look, these are different philosophies. You are looking at different ways of everyone is here to make money. I mean, that's the objective. It's not
Right.
like someone is here to do some amount of good for others and say, no, no, it's not about money. Money is the key. I mean, finally, you are measured on what returns you are making. Because if the returns are suboptimal, it doesn't matter how good a story you have. Finally, some people will say, boss, it doesn't matter. I mean, you are a great guy, you have a good story, but returns matter. Finally,
Right.
returns are better. I mean, one of the things that I mean, it's talked about in momentum is that what they call as uh, I mean, we are chasing the tail in a way kind of thing because we don't really look at the business angle itself.
Mm-hmm.
What I would my own thought process is, look, if a stock goes up because of multiple reasons, I mean, earnings is one. I mean, that's the key. I mean, earnings is the key, but earnings comes much later. I mean, if there's a sound, I mean, when you look at value venture capital investing or private equity investing, there's no earnings per se at that point of time. They are
Right.
looking at a bigger picture and saying, boss, we believe that this company may have a very good future in the 3 to 5 or 7 years, that kind of thing. At no point they know that, and most of their actual bets actually go wrong. Even in momentum investing for us, it's more or less a 50-50. It's a coin toss. To be honest, it's a coin toss. At least for me, it has been a coin toss. 50% of my trades have been winners,
Right.
50% have been losers. The
Absolutely.
question has been about the winners are big relative to the losers. So that has made up for more than made up for the losses that I've incurred. I mean, there's no way that momentum. I mean, when you talk about speculative, everything is speculative. To me, it's there's no non-speculative saying that no, no, I'm not speculating. You are speculating either on the government. I mean, sorry, either the company, either on the company's industry doing better. I mean, somewhere you are. I mean, you have to take a call, right? At some
Right.
point, you have to take a call and say, look, this company is, assume a company is trading at 1,000 crore market cap, and you think there's a growth in there. The thinking of that there's a growth in India, it's a speculation. You don't know. We don't know. I mean, no one knows. I mean, even the CEO may say, "No, sir, we think that next year our industry will grow very strongly, 100%." But that's still speculation. What we are doing is more of, I mean, the reason I think there's a disconnect between momentum and most of the types of values investing is but because we don't have a story.
Correct.
I mean, my biggest winner, for example, personally, has been CG Power.
Mm-hmm.
I've been holding it for 3 years plus, which is a rarity in the world of momentum investing because it has been doing phenomenally good.
Right.
No, it is not just doing phenomenally good in terms of price. It has done very good in terms of earnings itself. It's that when it came into the momentum filters, earnings had still not yet to show up. But I mean, look, the whole concept has been that I mean, there will be smart guys who are willing to do the deep work, pick up at a high level, and I mean, the prices get pushed for a reason. We don't know why the prices are getting pushed, but we think that because the prices are being pushed higher, the probability is that it's all a game of. To me, it's a game of probability.
Right.
The probability is that it may continue, it may not continue. For me, the advantage is that I don't need to wait a year or two to find out whether it continues or not. I'm looking at every month, so I know worst case basis, end of the month, I'll check it out. I'll move to something else. I mean, what I want is something that is working kind of thing.
Mm-hmm.
Well, I mean, and I feel that market is better judge than me. All I'm trying to do is coattail the market in a way where I'm with the big guys kind of.
Right. And you've made a very good statement, sir, about the probability. Momentum investing is about probabilities but not certainties, and
Yeah.
it also reflects in the strategy where it is a high churn where we invest, we sell, we again buy and sell, and unless we find the winners. And how do, let's say, a new investor who's starting to, let's say, start with the momentum investing learn this or develop this psychological comfort to operate in probabilistic framework?
I mean, everyone has to run its in his own pace kind of thing. There's no shortcuts kind of thing. You can watch as many videos or read as many books kind of thing because finally when the metal hits, it's when you are a drawdown, it's your money on the line kind of thing. Only then, you can do a lot of what we call as paper trading kind of thing. All is nice in theory. It works out. Practice, you have to. You can't. What do you say? Be a good investor. Forget about momentum. You can't be a good investor without going through the time. Time is the only way you can. You have to keep developing, keep interacting, keep learning. understand where you are maybe making a error kind of thing. I mean, it's a constant process. It's a constant process of trying to understand ourselves better and better. And make mistakes happen. When mistakes happen, the question is it a mistake because of my lack of thinking or lack of doing, or because the market itself? I mean, if the market falls and your portfolio falls, there's no error in itself. As long as you think that the system developed decently enough, excuse me, I think that's, I mean, look, you can't become a Virat Kohli or a Sachin Tendulkar by just observing them play. You have to play, you have to be on the field. And I mean, no matter how much you think about facing a batsman at 140 kilometers per hour, only when the ball is coming to you at that force, then you really know what you will do.
Right. There's no escaping the reality, but to test the waters and see your own comfort and build
Yeah,
the
I mean, look, I mean, it has to start slowly. It has to, I mean, look, it's something that money is so, what do you say? I mean, it's tough because we are dealing with real money, real savings. I would say go through, go follow the Taleb's barbell strategy. Put much of it is in safe assets. I mean, even if you want to exposure in the market, safe assets as in index fund like a Nifty fund, and then take 10 or 20% and say, okay, this is where I'll try understand
right.
better, because it takes a cycle. It takes, I mean, I've been here from now nearly 20, 25 plus years kind of thing.
Mhm.
And people drop out. Every cycle, people drop out because
Mm.
when the cycle ends, it ends at a very, I mean, you take 2008, 20 was not a cycle end in a way. It was very, very short crash kind of thing. By the time you realize what happened, I mean, and there is a lot more other thoughts. I mean, in 2008, for example, Indian markets fell, but the economy itself was holding up very strongly. And more importantly, the man on the street was not really impacted. 2020 was not like that. Man on the street was impacted. So people had more concerns otherwise. Forget about the markets. So, I mean, you have to go back to 2000 kind of thing. I mean, when a cycle changes, there's a dramatic shift. And that dramatic shift really, I mean, unless you are really clued in kind of thing, you think that, okay, I mean, look, everyone is affected. Mark to market, everyone gets hit badly kind of thing. It's not about someone else not getting hit badly, only me getting it. Everyone gets hit badly. The question is, what do you next? Because what do you do next defines how
Right.
will you perform from here. I mean, I know people who quit at every cycle kind of thing, because at some point they say, "Boss, enough is enough. I can't take this any further." It's a pain that it's tough to express. It's tough to, I mean, and you can't advise because you don't know. I mean, when 2008 was happening, we never knew how long this could happen. I mean, it's all thanks to federalism of US that they started pumping in money and the markets finally bottom out. But there's a question of whether the world is ending. Even in Corona, no one knew, no one knows. I mean, at the depth of the drawdown, you never know what the future will hold. Only hope is that overall, as long as I am surviving, as long as I can keep my calm. But I think that that's not easy. I mean, it's all nice to, I mean, here, I mean, now compared to earlier, we have hundreds and thousands of fund manager interviews, books, articles, newsletters, everything. But finally, you have to, I mean, at that point of time, it's your will against your own, because it's your money on the line.
Correct.
And money makes us, I mean, look, if you have a crore of rupees, you feel that, okay, I've earned something kind of thing. And then you lose 50 lakhs. 50 lakhs is a significant sum of money, life changing money for many of us.
Right.
So when you, I mean, that may be a temporary. At 3 years from now, the 50 lakh may actually become 1.5 crores. But that doesn't matter. At that point of time, the ability to absorb 50 lakhs, it's okay. I mean, this is nothing, not the end of the world kind of thing. I mean, that comes from belief here. I mean, I still think you have to really believe in your system kind of thing, regardless of what. You be a value investor or a quality. There will be times when all seems working against you kind of thing. At that point of time, you have to hold on to your belief, as long as you know that belief is not a stupid belief in a way that, I mean, it's not a Ponzi game we're playing, or a game where we know the end result will always, I mean, it's not a zero sum game, it's not a negative sum game. It's not a casino where you know no matter how many times you win, the probability is always in favor of the casino. That's not like in the market. Markets in its favor of us. because overall over time the GDP will grow, continues to grow because population growth is happening. GDP will have to grow. Even a country like Pakistan, which is facing enormous difficulties, has a positive GDP. So
Right.
I mean, India will have. I mean, again, then that comes to the belief of how your country will do. Because if you don't have those beliefs, it's tough. Yeah, at some point you have to take that belief and say, take a call kind of thing. I mean, look, I mean, you can read what do you say, philosophical kind of thing, all nice, but Monday morning market opens, your portfolio again goes down. How you will react? That's the question, and that question only the investor can answer.
Right. We have drawn a lot of parallels to the investing, or especially momentum or any style of investing, with the belief, core belief that one should have in the markets. So, I'd like to draw some parallel on your thoughts that there's a link between spirituality and the style of investing, right? Like acting without detachment to outcomes. How do you see this?
Krishna says to Arjuna kind of thing.
Yeah. How, do you see any spiritual ethos reflecting the practice
Oh,
of?
no, not really. Look, I mean, I'm not that kind of a spiritual guy, to be honest. At the same time, that makes a lot of sense because if you are attached, I mean, I've what do you say, seen myself make mistakes because of attachment of stock names, kind of earlier times. I used to
Okay.
love, I mean, way back in Infotech times, one of the stocks that did good money for me was Silverline Industry. I mean, Silverline. It was a tech company. I
Ah,
had
right.
bought it $8 or something. I don't remember why I bought, but I liked the name. I mean, the rationale was nothing of industry, company kind of thing. I liked the name. When it was going up, I sold at some point of time and then I regretted it. It was such a nice name and it continued to go up. It was not like I sold and it went off kind of thing. It continued to go up. And so, I mean, look, and our results, I mean, no matter how much good efforts you make, that may not yield the correct result at that point of time. The reason we are doing this today, for example, is because we have a tremendous good market, 4 years of phenomenal markets. I haven't seen this kind of broad winnings without, I mean, at any point showing any case of jitteriness kind of thing. I mean, even if you take the 2003 to 2008, which was much larger raise, I mean, index Nifty rose from 1,000 to 6,000, 6x. We have not done that. I mean, Nifty was 6,000 at the bottom of Corona, something 6,000 odd kind in Corona. So we have not gone 6x in the 6 years or 4 years. So we haven't done that. But during that time, we had two tremendous falls. I mean, India government fell, market fell around 30%, I think. Actually, it circuits to one day kind of thing. Then we had 2006 crash. It was a more or less a smooth crash or true and true kind of thing. So we had I mean, this has been a very, very fantastic market for, and it has no, I mean, what's amazingly is about this rally has been that it has not come, I mean, it has not built up as a bubble kind of thing. If you look at
Hmm.
valuations, India has been high, but we have stayed high kind of thing. It's not like we have gone phenomenally high in sector. I mean, a 2000 bull market, valuations of IT companies were 100 times earnings, 100, 150, 200, depends. I mean, companies had this, I mean, crazy numbers kind of thing in terms of P ratios. We haven't seen any segment of the market today, or it would have 6 to 8. I mean, next year 7 to 8. We had phenomenal rallies in only infra, real estate, power kind of thing. This has been much more broader kind of thing. So I think we have been lucky in that sense. I mean, again, look, I think we'll have great bull markets and then lousy times. The question is, if you participate in one good market, then you can mentally be much more prepared for the lousy times coming up. But if you enter in lousy times, much more tougher. I mean, regardless of how much we put in effort, there's only so much our mental makeup can take.
Correct. That's right. Sir, one question that I wanted to ask was with the other styles of investing, let's say value or quality, what can we learn from them? Not in terms of the strategy, but in terms of um their frameworks or their styles. What can we pick up as momentum investors?
So, look, I am very, what do you say? I mean, I love value investing. I just don't have the ability to invest that way kind of thing. Because I think value investing is a very phenomenal. Look, our the biggest issue what we face is, as you rightly said, it's a high churn kind of thing. So how do you reduce the churn? There's no way you can reduce the churn without impacting returns. I mean, it's a trade-off. You can reduce the churn, but that will at some point start impacting your returns, because you are letting a stock that is weak continue to be in the portfolio just because you don't want to add more churn kind of thing. I mean, is there learning to be done? I think there is, but for me, it's a combination. There's no, I mean, I don't take it as a, there's a thought process of not having to label yourself as a investor as a value investor or a momentum investor. I will label myself as a momentum investor because that's what I really believe in. But I mean, for me, for example, there's one post of Anand Sridharan of Nalanda, where he talks about their exits because they have a phenomenal track record in terms of having longevity in how long they hold the stock. Their average holding period, I believe, is around 9 years.
Oh,
So
wow.
he talks about how even if a company is giving a bad result in one quarter, so how they look at it, I mean, give it a bit of a rope saying that, okay, is it one quarter or a 2 quarters kind of thing, or is it's something that may continue? So for me, it benefited in trying to understand where my exit policy, for example, trying to reduce the churn. For me, churn is also key. I mean, I don't want to churn because now with taxation being much higher,
Right.
that eats up. I mean, the more the churn you make, and then there's a slippages, which is invisible kind of thing, because when you enter, you are entering at a price that is not really, I mean, your system would say enter at X price, which is what yesterday's closing price is. But what you enter is not yesterday's closing price. There's a difference. And then your exit also has a difference. Both the difference actually add up because your exit is stocks that are coming down. So which means that stocks are already falling and you are actually trying to exit them. So the slippages actually add up kind of thing. I mean, it's a cumulative add up. It's cumulative kind of thing. Same thing for stocks that are going up. You're trying to buy stocks that are already going up. So I mean, for me, look, once you have a core philosophy, core thought process, then the idea is okay. Can I work on the edges kind of thing? So for me, it's always on working on edges, on trying to where can I? I mean, as long as I don't give up too much of returns, then it makes sense. Because if you're really giving up too much of returns, then it doesn't make sense. You will better just following the system, paying the taxes and everything. Because if system gives you 60% and you are making 30%, the 30% is not going to go away in taxes only. You are just losing 4 to 5% kind of thing. So there is a trade-off. We have to. I mean, one has to. I think go to. I mean, I think everything adds value. I mean, I read a lot of. My bookshelf is filled with value investing books more than the momentum because there's no real momentum books out there. A couple of only there's I think 2 or 3 good momentum books, but mostly value books. Like, I mean, I don't know whether it was Buffett or Munger said it. It's just about. I mean, it may be a confirmation bias. You are reading, you are understanding, you are. I mean, even they go through bad times. I mean, value investor goes through bad times. They'll have times when they don't see opportunities even as the market is going up. When their returns will start to diverge from the market. I mean, how they have gone through that episode kind of thing. Because you do, I mean, there's no compulsion to be 100% investor market, regardless of when the market is kind of thing. So I think it's more of a trying to get a confirmation about how other fund managers are doing. I don't think you can take a exact example and say, boss, I'll use this directly because it's the much more tougher. It's a very contrarily approach momentum investing compared to both quality and I mean we are our at a very basic level we don't even look at balance sheet. So where do we start comparing us? But I think philosophy wise you can actually say okay. I mean it's just giving a comfort that overall markets will go. I mean interest goes up. You get a feeling that things will be all right. Especially it helps India when the market is in a downturn kind of thing. Because in upturn, you don't care. You don't care when the market is doing very good. Why do you care? You don't care about it. When the market is down, all things start to matter.
Got it. So, and you mentioned about the books that you have talked about. No? So, are there any books which are not related to momentum investing? One can pick up and learn some of the insights which one can use in their investment journey, which are not related to investment again, which are non-investment related.
Look, I don't think you should go that way. I mean, then you are again going back to the philosophy where you're doing your job for getting a result kind of thing. Because if you start reading a book with the objective of getting out something of that book,
Mhm.
then you, and I mean, Charlie Mughal, I think last year or somewhere he had spoke about how he had read balance, I think, for 50 years, every year, every month or whatever. I don't know what time frame is about that publication. And he got two phenomenal ideas, 50 years.
Okay.
So, I mean, for me, it's like reading has to be for your pleasure, for understanding, for, I mean, I read a lot of autobiographies because I love understanding the stories. Again, it's all survival bias. Everyone, most autobiographies are people who have actually made it big. You
Correct.
know, I mean, if you people who have lost really right kind of thing. I mean, it's not like you no, I made a mistake, I screwed up big time, so let me write a book kind of thing.
No will
People
be talking.
almost biographies or even biographies are about people who have done it big because that's what sells. I
Right.
mean, it's better to sell about Elon Musk than Nikola Tesla. Because Nikola Tesla did not really achieve, even though he was a phenomenal inventor, he did not achieve what Einstein or Einstein for that matter. So for me, I love reading autobiographies. I love reading company histories kind of thing. So for you, because it gives you understanding of how the company has evolved. I mean, look, these are all may not actually. I mean, you can't actually have a say. Okay, because I did this, I can relate to this.
Right.
But overall, it adds up your knowledge bank kind of thing. Over time, you will say it maybe at some point will help.
Makes sense. Makes sense. Absolutely. So without any motive, just read for the pleasure of.
Yeah, I mean, read because you. I mean, again, it has to come from again. Everything has to come from us, kind of thing. No, I mean, you have to imbibe the. It can start. I mean, what has happened, especially in the recent times, is with Twitter and everything. We have got used to a bit-sized news, bit-sized information.
Mm.
Reading is becomes tougher. Reading becomes tougher, kind of thing. But I think it's a practice. It's a practice over time.
Right. Makes sense, sir. I think the key takeaways, as you mentioned, read for the sake of pleasure, not for thinking about the outcome that you're going to get. But still, I'm curious to know what book are you reading at this point of time? What are you reading, sir, right now?
Currently on my desk, I have this book. I don't know whether you can see it, kind of thing. Okay,
The
the
Honda.
Honda Meet kind of thing.
Awesome.
It's a book on Honda Motors kind of company, kind of, and how they came up with. I mean, from the start. I mean, look, India doesn't have too many companies with a deep history.
Mhm.
Japan, on the other hand, has companies with 200, 300 years of history in that sense.
Right.
So the idea is to understand how does progress. I mean, for example, if you want to read the autobiography of the guy's name, I forget, Panasonic today, what is known as Panasonic, Matsushita kind of thing. So it was, I mean, he started pre-World War II, I think in the 1920s, 30s kind of thing, started his journey from there. So it's, I mean, very interesting to read about people who have been able to build large companies. For me, I mean, one of my favorite books actually is When Genius Failed
Mhm.
on long-term capital management, because it's one of the very few books that talks about failure in a
Right.
very, I mean, they don't show it as if the guys were stupid to do it kind of thing. There was a lot of things that came added together, and suddenly, I mean, there's this famous joke about how did you go bankrupt? I mean, slowly and then suddenly kind of thing. That was what happened with the long-term capital management.
Mhm.
So for me, it's I love reading companies books. I love reading books on autobiographies, books on a bit of history kind of thing. There's another book, Spark, which is it talks about the. I mean, unlike India, China is much more closed for external. I mean, look, the history they give out is the history that you they want others to know about, kind of thing, not the history they which may not be, which may be real kind of thing. So there's this book by a new book that came out, Spark, which talks about guys who are trying to what is it, showcase the history of China as it was or as it is kind of thing. I mean, the good and bad. Look, end of the day, every country has its good and a bad. You can't have only good. No, I mean, since communist China, I mean, communism came, only good things happen. There's been bad things that talk. I mean, no. So I love reading history in that sense. So and for me, what will I say? So I think history has a very positive impact on understanding yourself because you look at the past and look at how things have panned out, and we are lucky in the sense we have been very lucky in a lot of areas, be it medical, be it I mean recreational kind of thing, be it in information awareness. When I started off in 97, 88, we had internet, but very expensive, and computers were itself were rare. So there's no access to way. I mean, if I wanted to learn about a market, the only way would have been if I stumbled upon a good guy suddenly who said, "Okay, no, I mean, I'll spend my time with you, trying to help you," which even today won't happen. But today you have an ability to reach out to fund managers on Twitter or wherever they post kind of thing, and most of them actually are interactive. It's not like they don't want to help. They just, I
Right.
mean, no one wants to come forward, but if you have a question, they will always come out and say, "Was this is the way you can think about?" And that I think history gives you a perspective of how good things are for us, even though at that juncture it looks like was India is going down the drain in a way, but we are at a very good place, and that for me gives a confidence that I mean, look, you are betting your future on a country. We can either do it passively or be actively. For me, it's
Right.
more of active decision making. I mean, I want to be actively in charge of that.
Right. That's where the core belief comes from. Betting or believing.
Yeah, I mean, like, as I said, there's no. I mean, you have. I mean, you can study. I mean, you do your studies, you do your thing, but finally, your confidence has to come from
Correct.
somewhere you
Yes.
inside you, and that comes from.
Exactly.
For me, it maybe come from reading, understanding things, and just being in a cycle, I
Mhm.
think has helped me a lot. I mean, look, the
Mhm.
time has taught me a lot of things. So now I know, okay, things go bad. How do I mean, if I want to measure my reaction when the things were going bad when I started journey and today, it's much more different. I'm much more immune to losses. Not really, I mean, it hurts. I mean, look, if you have a loss of a 10% in the market, that's because the real money is going down.
Right.
But I know that this is part and parcel. So that I mean the absorption is much more because if you don't know what if you haven't gone through that in the past, the first 10% will always be the toughest kind of thing because you are suddenly fish out of water. You don't know whether you will survive or die kind of thing.
Right. Makes sense. Thanks a lot. Thanks a lot for sharing your wisdom. And if I have to summarize for our viewers, the key point of discussion that we had is having a core belief in yourself. However, great backtests you have or books you read, it still comes down to yourself putting your fee, putting your making your hands dirty, putting your money. Maybe you can start small, but that's a great way to learn yourself and staying the course through cycles that then you become immune to any of the vagaries of the market and build your resilience. There are things to learn from other styles of investing, but having faith in your core belief is what one should do. I think these are the main insights that I have to try to
Yeah.
summarize. I really appreciate. Thanks a lot, Prashant sir, for taking your time,
Thank
and
you.
I wish you a very great and prosperous 2025.
Thank you. Thank you very much.
Thanks a lot.